let's take a look at those business headlines and welcome in senior market strategist and CEO of Market Rebellion, Marc LoPresti. And joining us in studio is financial markets analyst and author of Planet Ponzi, Mitch Feierstein. Gentlemen, good morning. Mitch, I'm going to start with you. Okay, so we talked about gold and precious metals yesterday, but let's talk about silver. So silver futures actually fell almost 9% Monday. Silver got as high as $80 an ounce before finishing at just over $70. I mean, that's kind of the worst day for silver futures in almost 5 years. Mitch, is there anything to worry about here?
No, I mean, look, I'm still bullish on silver as a commodity, and it traded as high as $95 in Dubai. So over the weekend, but you know, I think what we need to look at with that is where's the demand? There's demand, and I think what we saw was short covering by some big bullion banks that may have been short, and the exchange forced them to buy it, which caused the price to surge. And I think once you have that, then you have the algorithms that kick in, and then you have the momentum traders that come in and start buying. I think you wait for a pullback if you're initiating a new position to add to your positions, but I'm still very positive on it. It's up still around 160% for the year, still the best performing asset class out there. Keep an eye on it. You know, don't put all your eggs in one basket when you go in to take a position, and always wait for pullbacks. Don't buy at the top of the market.
So Mitch is not too worried right now about that silver. But let's move on to the auto market. So General Motors having its best year since it came out of bankruptcy all the way back in 2009. They're beating Tesla and Ford. Marc, what's really been the key to GM's resurgence that we're seeing?
Well, first of all, good morning, guys. I'm sorry I'm not there in studio with you to finish off what's been a fantastic year of doing the show with you and Mitch. This is a great story, Alex. At the end of the day, this is a company, this is not a tech stock, this is not a Mag 7, this is not an AI name. This is good old-fashioned American manufacturing, making a quality product in a company that's been very well run by its CEO. And look, we have to give the president a little bit of credit here, because some of the wind at GM's sails can definitely be attributed to the president's policies around the auto industry to bring manufacturing of automobiles back and to bring the U.S. back to the top of this industry. I'm feeling pretty good about GM going into 2026.
Yeah, you make a fantastic point there when you bring in President Trump into that conversation regarding GM. But let's now turn to the housing market. Pending home sales jumped by the most in almost 3 years. Pending home sales were up 3.3% in the month of November, almost triple the 0.9% that economists had originally expected. Mitch, what do you think spurred just a big jump, and what does that really mean as a sign for the economy as a whole?
Well, look, you know, we've been talking about kickstarting the housing market, and the Treasury Secretary said we've got to kickstart the housing market, and the president said that as well. And the way to do that is by bringing down interest rates, and the Federal Reserve has been political. The Federal Reserve, by the way, Federal Reserve Bank is not really a bank, and it's not part of the federal government. It's owned by the banks who are members. So we have to differentiate that, and a lot of people misunderstand that. But so interest rates were as high as 7% on a 30-year fixed under the Biden administration, and they've come down to closer to 6%. So it is improving. Wages are going up relative to inflation, which they weren't. They were going the other direction under Biden. So as that improves, it gives people more room on the road to actually go out there and make purchases. I think as interest rates continue to come down, which, as I've said, we're going to get between 2 and 4 cuts next year, people will ease up in the housing market, prices will improve, and people will start buying again.
Yeah, all sounds pretty positive right now, but let's turn to our favorite subject, Marc. That's food. Wendy's has had a rough go of it lately. They're closing hundreds of locations all across the country, shockingly. But today is National Bacon Day, and Wendy's, they're celebrating by offering 1-cent junior bacon cheeseburgers with a purchase on their app. All right, so Marc, we obviously see Wendy's really trying to push their sales. McDonald's, Taco Bell, both went back to their quote-unquote value meals and saw a huge sales jump. Do you see other chains like Wendy's really doing this as well to stay competitive? I mean, Marc, I cannot believe we're talking about these fast food chains going back to value meals because they got too expensive.
Well, first of all, I think we have to acknowledge Happy Bacon Day to those that observe, and I am certainly observant when it comes to Bacon Day. And there are ways to get out there and take advantage of this. You have to download the Wendy's app. There's a couple of steps you have to take, but you can, in fact, get a Wendy's bacon cheeseburger for just 1 cent. And look, at the end of the day, I think that all of these fast food chains returning to these value meals have a lot to do with the consumer activity at the lower end of the income band, right? Where we do see lower income consumers looking to stretch their dollar as far as they can as the president's continued battle against food inflation, which we expect to actually will start winning in 2026 to take effect. So yeah, I think we could see more deals like this on the horizon. And of course, Alex, happy Bacon Day to you and Mitch.
Happy Bacon Day. I love it. Marc, LoPresti, Mitch, Feierstein, gentlemen, thank you so much for joining us this morning, and Happy New Year.
Thanks a lot. You
Happy
too.
New Year.
Happy New Year.